Let's bring in Peter Boockvar, Chief Investment Officer at Bleakley Advisory Group, a CNBC contributor. Okay, the Fed call, that's in the past. What do you see going forward?
Well, the Fed is stuck between looking at the data today and seeing an unemployment rate at 3.7%, CPI, well, they look at PCE, but give or take around 2%. But looking forward, they see the trade situation, they see manufacturing slowing, they're seeing it spilling over into services, and that is the cause for their concern.
Yeah.
The question is do rate cuts even matter in terms of stimulating economic activity?
Well, the market didn't think so.
Right. And what's going to happen today? If you're a businessman, you're a household, are you going to do something differently today because the Fed cut rates yesterday? No, because rates are already low. And if you're buying a home, well, the bond market already cut rates by 100 basis points for you over the past year, and that has done very little in stimulating more purchases. It's only helped refis.
And that's, I mean, you're making an excellent point, and it's the Fed is relevant, but the reality is the bond market did the work already. So the Federal Reserve is kind of those vignettes after the credits at this point at the end of a movie, isn't it? Yeah,
they're sort of just playing catch up. They're trying to re-steepen the yield curve, and we'll see whether that works.
What are they trying to accomplish?
Because they think that banks need that steepness in order to make profitable loans.
Yeah.
But there's just this knee-jerk reaction, oh, growth slows, let's cut rates, assuming that it matters. Unfortunately, there's no one within the Fed, outside of a few, that are questioning the need for these rate cuts to see if they even matter.
But their mandate is inflation and trying to maximize employment, basically, right? I mean...
Right, which you can argue they've met with the unemployment rate as low as it is.
There's 7.5 million open jobs.
Right, and core CPI printed 2.4% last week, which is an 11-year high. Not one person asked Powell about that. They keep looking at PCE, which is lower, and they think they have license to do what they want. But we'll have to see what happens with the October trade deal. That can obviously change the dynamic here. If there is something, I'm not expecting a lot, but if there is something, well, that changes that dynamic. You won't get any more rate cuts, and you'll probably see a large rise in longer-term interest rates.
Sit tight. I want to go to our colleague, Steve Sedgwick, talk about the Bank of England. We'll come back to you and get reaction, all right? So sit tight, Peter. Well, the Fed is not the only game in town. Overnight, the Bank of Japan voted to leave rates near 0%, as they have been for about 20 years. And later on today, you're going to hear from the Bank of England. Speaking of England, Steve Sedgwick joining us now with what we can expect for the BOE. Steve.
Yeah, thanks very much indeed. Brian, I want to introduce you to a new concept for many of our viewers. It's my new concept. It's called the rates smorgasbord. Now, this is a Scandinavian word. It means a big buffet, something you and I would absolutely love, of all different kind of pickles and herrings and all kinds of things. But that's what you're getting in Europe. You're getting a rates smorgasbord. Let me just show you what I've got in advance of that Bank of England statement. You've got the ECB last week cutting rates, giving some form of tiering on deposits as well, plus having this big QE program as well. So you've got a cut from the Europeans and the central bank. You've got the Swiss, who are desperate not to cut. Their economy is fantastic. They've got a 2.6% unemployment rate. So they held steady today already, when many people thought they would mirror what we saw from the ECB, because, of course, the Swiss, ultimate safe haven out there as well. Then you've got the Norwegians. What do you think they've been doing? They've been hiking rates today. Fourth time in the last 12 months the Norwegians have hiked, because despite the fact that they are a huge part of continental Europe, they're not dictated to by the ECB. Plus, they've got the small matter of some of the biggest oil reserves on the planet, and they're worried about an economy that's just running a little bit too hot. And then you've got dear old Bank of England here. Mark Carney, his hands are tied because, of course, we have the small matter of today's Bank of England meeting being the last big one before, small matter of Brexit. So the point here is European markets are wondering how much bang for the buck are we getting out of these central banks, and really, are they still moving in unison? Are they on the same page? Because there was this feeling that central banks around the world were all cutting, they were all easing in order to galvanise the global economy. But is it working anymore? Which brings us to the next point. Has central bank policy in Europe, not in the United States, but in Europe, run its course? Because people more and more are beginning to ask that question, and asking the next question, Brian, will there be a fiscal response from governments now as opposed to central banks? This is the European smorgasbord.
The European smorgasbord. I knew you'd come up with some way to make central banking not only interesting, but delicious. Steve Sedgwick, thank you very much. All right, last meeting ahead of Brexit. I mean, you've got to imagine, if you're our Fed, now you've got dissent, 3 people on the board, one do one, whatever, that these types of geopolitical things, they've got to factor into your thinking.
Well, Steve made a good point that the Bank of England's hands have been tied. They've been paralyzed for 3 years now with Brexit. Inflation's been running well above their benchmark rate of only 50 basis points, so they're sort of stuck. And also the other point he made was that central banks are sort of at the end of the road in terms of their abilities to stimulate growth. And I think that's a major problem. I mean, the ECB did ease, but there's no response function to what they did. The Bank of Japan talked about trying to lower rates potentially in October again, them wanting to steepen the yield curve, but there's not going to be any response in Japan. Japan's been immune to low rates.
Yeah, exactly. Rates don't matter in Japan. You know what matters? A negative birth rate.
Right. There's no self-reflection on the part of central bankers in terms of have we done enough, and doing more is not going to help, and it's just going to dig that hole
Has
deeper.
Powell lost the Fed? A lot has been made of the fact that there's not unanimous agreement. I think the fact that there's disagreement is probably a healthy thing.
It is, because the outlook is so uncertain right now. The limited visibility that everyone has on what's going to happen over the next 6 to 12 months is reflected within the Fed. And I agree. I think that's a healthy thing.